The Federal Reserve is expected to raise interest rates again today. Fed Chair Jerome Powell set to speak at 2:30 p.m. Eastern Time as second quarter earnings reflect an economic slowdown. Joining us now, senior national correspondent for CNBC, Brian Sullivan. Sully, it's good to see you. So how high is this hike going to go today?
Well, that is the question. We'll see if the Federal Reserve can remain steely, man.
Oh,
I'm sorry
that
about
was
that,
real
Willie.
good.
I apologize. I know I've already been up for a couple of hours. Weekend at the college.
Great callback.
Like I planned. Anyway, here's what we're thinking: is the expectation is for what we'll call on CNBC we'll call it a 75 basis point hike. On normal TV, we're going to call it a 0.75% rate hike. In other words, raising that baseline borrowing cost by 0.75%. We don't know. There's some talk they could go bigger to all the way to 1%. These are either way, Willie, whatever they do, 75 basis points or 100 basis points, 1%. It's going to be some of the biggest and most aggressive interest rate hikes in recent American history. Why are they doing it? Because I don't need to tell your audience who go to the store every day, they see inflation for themselves. The Federal Reserve is trying to pump the brakes on the economy. The idea is this: the Fed raises rates. Banks raise rates. I hate to say it. Credit card companies raise rates. They try to dissuade consumers from spending as much money. I know that sounds weird, but when you have too many people chasing too many things like used cars or certain commodities, prices go out of control. So the Fed is trying now to slow down the American economy. The problem, Willie, is will they do it so much that you slow the economy too much? You actually put the economy into a major downturn or a recession. The good news, we've gotten some good news. Gasoline prices, they're down 40 cents or whatever in about a month's time. We're seeing some commodity costs come down. Rents still too darn high, but there are some signs that inflation is moderating.
So, Brian, if it's a balance, right, you don't want to pump the brakes so fast that you make the car stall and you get the economy into a recession. And there is some evidence, as you're suggesting, that the last rate hike is having an impact. We're seeing some prices starting to come down. Why not, with all the speculation that we may, and the White House suggesting we aren't, but there's some debate about whether we may be heading into recession anyway, why not wait just a little bit longer? I mean, if the previous rate hikes are working, they're discouraging people from spending a little bit. Couldn't they just carry on with that?
Yeah, their fear is that inflation is so rampant and so hot, it's at 40-year highs. It's really at all-time highs by some measures because the government's always changing how they moderate it, that they're really aggressive about this inflation idea. Listen, inflation, you guys talk about politics all the time. I don't. But I got to imagine as we approach the midterms, and you're seeing the president already out there on Twitter and social media saying gas prices are coming down, we're pumping more oil. Why is he talking about these things? Because, listen, ultimately, all the stuff we talk about, so many elections, as you would know better than I do, come down to the economy and higher prices. The Federal Reserve, the question is this: can the Federal Reserve do this without damaging the economy? And how much will rate hikes matter, considering if your rent has gone up, is your landlord going to cut your rent because of higher rates? No. Here's the biggest thing that I'm watching. What they call revolving credit, the amount of money that's on credit card debt, is at a record high. I guarantee you, your audience knows they're getting notices that their balances or future spending, those rates are going to go up. So not only do you have a balance going up, your monthly payment's going to go up. And let's hope that incomes are going up at the same or a higher rate that will balance out that difference. Otherwise, even with rising wages, you actually have less buying power.
And you can't keep up with it. That's right. And tomorrow, Sully, we're going to get that GDP number. There's been this sort of semantic debate for the last couple of weeks. If it's a negative GDP number, technically 2 consecutive quarters of negative GDP numbers means we're in a recession. The White House, Janet Yellen, others have said, well, we've got, jobs, as many jobs as we could want. We've got low unemployment. Inflation is too high. That's right. Prices are unaffordable for many people. What is that number tomorrow going to tell you, Sully, about whether we're in a recession or we're not?
It's going to, I mean, you nailed it. It's going to be a semantic argument. There's going to be, of course, I'm sure the Republicans are like, we're in a recession. If that, if we get a contraction in GDP, the White House has already been out there. Janet Yellen's on the Sunday talk show circuit. We had Jared Bernstein on, economic advisor on CNBC yesterday, saying the definition of a recession, which is set by this wonky economics group in Washington, that doesn't really matter. We know the economy is strong. Forget about the technical definition of a recession. Right. And so there will be this fight. It's such a weird time coming out of the pandemic because, for example, yes, the unemployment rate is way down. But at the same time, the unemployment rate only measures people looking for a job. And more than 1 million people have left the workforce that are of working age. So the unemployment rate is down in part because people have just said, you know what, for lifestyle reasons, risk reasons, other reasons, I'm out. I'm not going to work anymore, at least not now. And so there's all these semantic debates. We do know this. There's 3 million or 11 million open jobs in the United States. Walk around New York, walk around the suburbs, walk around anywhere you want. There's a help wanted sign. I don't think the semantic debate is as important as what happens in the fall. Has this sort of boom in this pandemic excess, right? You come out of the pandemic, I got to go somewhere. I got to go to Vegas. I got to spend money. People are spending all this money on airfares and hotels. Will that continue? If you know, Willie, let me know, because I don't know. You just wonder if it's a one-time sort of roaring 20s type mentality, right? We're out. Let's go. And then it wipes out.
Well, you just heard in Sully's voice how desperate he is to get back to Vegas, which was very telling. CNBC's Brian Sullivan with some expert analysis of the Fed and everything else. Thanks, Sully.